Hi, I'm Jeff Hirsch. I'm here at the Money Show in Toronto, and I'm with Rob Carrick. He's a personal finance columnist at the Globe and Mail, also does the investing column as well. And that is basically Canada's national newspaper, correct?
Right, the Globe and Mail is Canada's national newspaper, #1 business voice.
So it's not just a business paper, it's...
Nope, it's news, but we have
USA Today,
we have a very...
more New York Times?
More New York Times, but we have an extensive business section called Report on Business, and it is the definitive source of business news in Canada.
And that's where you're a big part of it. So
exactly.
I understand you like to focus on themes and trends for individual investors or retail investors.
Correct.
And ETFs are a big...
Exchange traded funds are huge. A big part of the questions I'm getting from readers every day are, how do I get started with ETFs? How do I sort of pick from among like 600-700? They're popping out new ones every day, like toast out of a toaster. People are overwhelmed.
Sure. So what do you tell them? How do they get started?
I tell them to stick to the core ETFs following the big marquee benchmark indexes. Those are the ETFs with the lowest fees, the most liquid. Those are the portfolio building cores to me.
Sectors as well. I mean, Canada's got a lot of interesting ETFs of its own, but you're saying just, you know, Dow,
I'm not a big sector guy, because I think you're kind of guessing about what's going to outperform and what's not going to perform. However, I do believe that you need to pick ETFs from different countries. Like Canadian investors have a tendency, and I think Americans do too, it's called home bias. I mostly want to be in the stock market of the country where I live. And in Canada, the big problem there is that we have tons of energy and tons of financials, but almost nothing in tech or healthcare, and that is why you have to be in the S&P as well.
I think that's more important in Canada because it's a commodity-based economy, whereas U.S., we've got a lot of foreign countries listing on our exchanges.
Correct.
So you get a little more diversification in the U.S., but I do agree you should be looking around other markets. But so you're country index oriented, not sector, and you want to be in all those sectors. But what about dividends?
Dividends are huge. You know what, coming out of the global financial crisis, dividend stocks led the way, and they have faltered only a little bit. They've really delivered for investors. In Canada, we have just tremendous interest in the big blue chip dividend payers. I think maybe even more so than in the United States.
Now,
people cling to them.
Is that something that you're going to direct people to through an ETF that's a dividend ETF, or how are they?
You know what?
Or is that something you're picking a stock on?
I think you can go either way. There's a lot of good dividend ETFs out there. There's a bunch of different dividend-focused indexes, but you know what? Even the mainline indexes, the S&P 500 and the S&P TSX 60 have a pretty good dividend yield, so you're still getting a dividend play. These indexes are built mainly on dividend payers.
Dividend stock. So the TSE, is it, or
it's called the S&P TSX Composite Index.
Is that 60 or 80?
Well, there is a 60, but that's sort of like an ultra concentrated blue chip version of it. And then there's the composite, which has about 285 stocks in it.
And similar thing to the S&P and the Dow.
Yeah, very, very
good
similar.
Dividends within those indexes.
Very good dividends for the most part.
So Interactive Brokers, I know, is about $1 a trade for those.
Very, very reasonable Interactive.
I use Interactive.
That is a very sophisticated platform, and the audience that I write for ranges from the super sophisticated to the I barely know what I'm doing, but I have a general idea. And I think IB might be a bit too high-powered a tool for them.
Agreed. Last thing, what's your take on Robo Advisors?
Big thumbs up. Big thumbs up. I think it is a very good option for the person who wants low-cost ETF investing, does not know how to get in, knows that mutual funds are too expensive, and is willing to pay a small but reasonable fee for someone to manage things for them.
And you get to talk to somebody? You have a person that you can...
Most firms now have a human you can talk to. Some will give you a dedicated account person. It is not cold technology, you and the computer alone.
Somebody who's an advisor that knows, as a fiduciary, what to tell somebody.
Right. Now, they're not going to do a financial plan for you, but they will say you need to lighten up on stocks, it's time to buy some bonds, or vice versa.
But for a financial plan, you still need to go to a regular advisor.
Or a financial planner who just does financial planning.
Exactly. Rob, thank you so much. Thank you, everybody, for joining us.